Hey everyone, Eric here with a few updates to the small stacks portfolio. So I wanted to give you a couple updates on some trades that I made and then just some new adjustments kind of to the overall approach. So let's take a look at the screen here. First off, I talk about most folks' first year trading, and I always say that the main goal should be consistency and being profitable. Okay, so that part aside, what I wanted to do is set some goals now that this account's been trading for a couple weeks. We kind of have an idea of what this looks like for us. So, the first goal that I think is reasonable if I were to give myself a goal starting out again with the $5,000, I would probably target something like 8%, I think is fair. And then my stretch goal would be 15% for the year. And the reason why I like those really that 8% is smaller accounts have a hard time returning kind of meaningful amount of money. So that's why I want to focus on the percent, not so much the dollar amount. And the reason why I say that is because, if you look at returning 8% on a $5,000 account, it's 400 bucks. Who really cares? Same thing at 15%. And then what I even did is broke that down to a monthly target. So if I wanted that 8%, it means I would need to make $34 a month. And for 15%, it's $63 a month. All of those in and of themselves really don't mean that much. The reason why I continue to pound on this, drum, reiterating over and over and over again that this small account isn't the account we're trying to grow. You need more money. If you want to really make money investing, you need more money than $5,000. You're not going to turn this into your nest egg. So, what I'm truly focusing on is developing a consistent approach that I know I can apply. And the reason why that becomes powerful is as this slowly starts to morph from a 5,000 to a 50,000 to a 250,000 to a $500,000 account to a $1 million account to a $2 million account, all of a sudden these figures start to mean something. So, for example, if you're using something like a $1.25 million account, whenever you get to that space, if you can still return that same 8% that you're building the skill set for now, instead of that being, $400 for the year, that's going to be $100,000 for the year. So you're going to make, again, if you can maintain consistency, you're going to make $8,300 a month. So my point is focus on the skill set. Let this account continue to grow. This will help you modestly move towards that goal. But if you're first starting out with pretty much anything less than 100K, you really need to focus on saving money. Because once you start getting over 100K, that's when the amount of money that you can make starts to really help compound your growth. But when you first start out, it's still going to compound, but it's relatively small. And it's important to understand the context of all this. And then if you sit there and you say, well, what the hell's the point? Just remember, right now, a CD account, I just looked them up, rates today. A 1-year CD, the highest I could find is 0.9%. So if you take that $5,000, you put it in a CD account, you get $45 for the year. So for the younger folks that look at this and they scoff at the figures because it's a low amount, I totally understand and identify with you. You really gotta focus on the bigger picture here. You're not going to turn $5,000 into your next big sum of money. Right now, we're building a skill set that as your money slowly grows via investing, and most importantly, as you're saving, that this is the skill set that's going to help you. It's not going to be too many folks want to make I think, too much money on whatever they have. And it just leads to a completely untenable approach that doesn't really help us when it comes time to start delivering on a larger sum of money. So just keep that in mind. So here's what I wanted to talk about in the portfolio. This is what we're looking like these days. I closed out Pfizer, yesterday. That was a $402 profit in total, which is a good trade for that. So if we take a look right now, total P&L in the account is 557. Actually, no, it should be a little bit more than that. Um, total P&L in the account should be $581. I forgot to add the coverage strangle to the P&L, so that needs to get updated. So we made 402 in the Pfizer trade as a whole. We made 155 in Kroger right now, realized P&L. And then in XLF, we made 24 bucks. So all in all, we're at $581 profit, which is about 10% return, a little over, which is really good. Starting on a 5K count, essentially 2 weeks in, that's something that I think is great performance, and I would love to maintain it, but I totally expect there to be a little bit of pain along with this. So right now we're pending, what is it, $109 that's out, which represents about a 2% return on the current account value of $55.81. So overall, I am pleased with where the account looks. Utilization is just over 3,000, which is just shy of 54% utilized. And that is one of the beauties of trading the way that I trade, is I'm continuing to make a really good return on the account. And as I'm starting to make money and find opportunity, I don't have to utilize as much to get there. So what I did end up doing today is establishing a new call diagonal in Bank of America. So I am now long the 18 June 21 18 calls, paid $8. That's an 81 delta. And then I sold the 16 October 26 calls at 82 cents. So that's going to be a little over 10% return on invested capital for that trade. Would be pleased to make that money. That's something that is completely reasonable for this account. Now, of note, Kroger still has no short calls on it. I have not put any short calls on the trade because although I can still make a little money on the short calls, it's not enough for what I would want to make. I want to make sure I stay at the 35 strike to be above my critical strike on the shorts. So I'm essentially waiting until I can make more money, and I'm okay with that. There's no real pressure on me in that position right now. It's showing, the leaps are showing obviously a loss, but just takes a little time for the trade to start working out. We already made $155 in the short calls, so we have some time to go in here. And remember, this Kroger trade, I allocated $1,500 for, and we're about allocated because I scaled in a little bit. Whereas on the Bank of America trade, I'm also allocating $1,500, but we only have a one lot. I'm expecting to scale into this trade as well once we have some time. So again, of note, for Bank of America, it's at a 1-to-1 ratio. I typically don't like to do that, but again, small account, we're constrained by capital. I'm starting with a one lot, expecting to scale into at max a 2 lot on the calls, the long calls. So it is what it is. Once I am able to have 2 long calls, I likely will only sell 1 call against to unlock that upside. Now, Bank of America does have earnings coming up on the 14th of next month, and my expiration is for the 16th. So what I'll end up doing is taking those short calls down before earnings and probably laying out additional short calls on earnings or very close to earnings so that I can capitalize on the increased implied volatility for that expiration cycle and see if we can make a few extra dollars again on the smaller account, because that's what the name of the game is. So right now, this is what our call diagonal looks like in Bank of America. Notice no upside risk to this diagonal, testament to the way that I structure them, so that there is no upside risk, focusing on delta management. And then once we're able to add another leap, or these aren't leaps, once I'm able to add another long call at some point, this is more what it will look like. But as of right now, we're going to stick with 1 long and then scale into the position in the future. So that about wraps up where I'm at in the small stacks portfolio. A few things that I want to make sure are, taken into account as we get closer to the election, I am going to continue scaling out of all of my accounts, including this one. And it's just because I view that as a very large binary event. The market has been extremely emotional. So I will continue to maintain exposure as I always do, but I will be mindful what I have out leading into it because I just don't want to expose myself to that risk. I don't see a good return on that risk. So I will be following through with that as we continue along. So, if there are any questions or any trade ideas, anything like that, feel free to reach out. Let me know. I still have $2,000 to use in this account, a little over, close to 2,500 bucks. So, plenty of opportunity to be had once I see it. But I am not forcing any trades because I don't need to. Right now, we're maintaining good progress. We're at a good return on the account. So I'm happy where things are right now. All right. Until next time, I'll catch everybody later.